Hello, everybody. Welcome to the Trading with Ashley show and happy inauguration day. There's something really special about the peaceful transfer of power, and it's a lot of fun to watch. And I am expecting the markets to really be bullish on a lot of the dynamics that are coming our way. But what I wanted to talk to you about today has everything to do with the insight we just received on Nancy Pelosi's trades. Now, she has been an amazing trader with a lot of insight, wink, wink. And if she has, we can either be annoyed by that or we can embrace the information that we're receiving and we can copy trade. So what I wanted to help you with today, I wanted to explain something that she's using, a very powerful tool, and it's called leaps. And leaps are something that I actually use, and I have shown in a lot of my videos. It has been one of my secret weapons to enjoy outsized gains. I was able to, in 2024, double the performance of the S&P 500. And one of my weapons of choice was leaps. And the reason is you can enjoy the upward momentum and the upward movement of a stock for a fraction of the price. And so you could go and buy 100 shares of a stock and pay full price for those 100 shares. Or you can purchase a call option a year or more out and enjoy the upward momentum of the stock for a fraction of the price. Usually you can get leaps for about half price of what the stocks are. And a lot of times I can find leaps that are a third of the price, meaning my buying power can be doubled or tripled. And that's how you get ahead. Either you have to be in Congress and you have insight on the ticker symbols that are going to pop, or you use the tools at your disposal to try and mimic that same kind of a return. And so what I'm going to go over with you today is her exact trades. I am going to show you how to go into the system and actually the keystrokes you'll need to make to mimic these trades. And it's interesting because some of them are very popular ticker symbols that you and I know very well. We're going to go through this. But there's two ticker symbols that I bet you have not heard of. I'm going to take you through those, and those really will provide, I think, the greatest opportunity for you because you don't yet see a lot of videos on these particular ticker symbols, and they're from industries that are now up and coming and that should really soar with this new administration. Now, you'll see the exact keystrokes you need to make to actually mimic these trades and make these trades when the market opens. But you really want to consider clicking the link below and joining my Discord because I'm going to take it a step further with my Discord members. I'm going to teach them how to finance these trades and either pay for the vast majority of the trade we're about to make or pay for 100% of the trade. There's two more powerful trades you can make to complement the trades we're making today, and that's the valuable part of being a part of the community. You can learn all these valuable tricks and tips to help you not just get ahead, but soar. And I wish that for all of you. By the way, for those of you that are just getting started and you have smaller accounts, you really need to consider my new trader network. I am going to leave a link of that in the description. That network has been incredible for our new traders. They are getting so much support to help with the X's and O's of trading, and I'm sending them a trade a week. I'm so excited to report that we have had 100% win rate in the new trader network from all the different plays that I have been calling for them. So most of them have been able to pay for their membership with the free trades that they're getting every week. I'd love for you to be a part of all of that. All right, let's go take a look at what Nancy Pelosi traded, and then let's go get everything set up so that you can make these trades this week. Her first three trades had to do with NVIDIA. She exercised 500 call options that she had actually purchased in November of 2023. The strike price that she had purchased the call option for was $12. The expiration date was December of 2024. When you purchase a call option, you have the ability to do one of two things as you near expiration. You can either exercise it, meaning you have a placeholder for the strike that you purchased, in this case $12. Exercising the call option would allow her to buy 100 shares per contract at the $12 strike. Once those shares are hers, she can do whatever she wants with them. And keep in mind, she did pay initially for the call option, so her true cost basis would be the $12, that's her strike price, plus whatever she paid for the contract itself. And then she can now take those shares and sell covered calls against them or just let them appreciate. The second thing she could have done is sell to close. When she opened up the call contract, she did a buy to open and she paid a debit for that. Then it appreciated in value as NVIDIA started to rise. Then the call option that she bought is worth a lot more at this point with NVIDIA so much higher. So she could have exercised it like she did, or she could have simply sold to close, keeping the difference. Her next two transactions with NVIDIA were simply the selling and buying of shares. Next up is Amazon. She purchased 50 call options with a strike price of $150 and an expiration date of 1/16/26. So she is bullish on Amazon because she would have not purchased these call options if she was not of the belief that Amazon would be trading higher. So in a minute, we're going to go purchase the exact same call options. I'm going to show you exactly how to replicate that trade. She's also very bullish on Google because she purchased 50 call options for Google, same expiration date as Amazon, 1/16/26. She used the strike price of $150. Her next trade had to do with Apple. However, I noticed she sold 31,600 shares, but she did not purchase a call option or repurchase any shares. So that was interesting. She may be in the Warren Buffett camp when it comes to Apple. This next trade we had heard a lot about before. It's Palo Alto, ticker symbol PANW. She decided to exercise 140 call options that she had purchased December of 2024, and the strike price that she had used was $100. The expiration was in December, so when she exercised that, she took ownership of those shares, 14,000, and she was able to get them for $140, irregardless of what it was trading at the time of the exercise. The next two ticker symbols are ticker symbols that I have not seen a whole lot of information on, and that means that if you follow suit with what she did, you may be getting in at a great entry level. Let's go through them. One of them is Tempest AI, ticker symbol TEM. She purchased 50 call options with a strike price of $20, and the expiration date was again January 16th of 2026. By purchasing these, she reserves the right to then exercise them and purchase the shares of this stock at $20, regardless of what it is trading at. Now, if you took this trade, you could do the same. You could exercise it, or you could simply sell to close, assuming that it is higher at the point that you decide to sell it. Now, with these leaps options, you want to keep in mind that theta decay, the time decay on the option, it picks up once you start getting about 2 months out. And by the time you're at about 45 days out, it's really a rapid acceleration of time decay. So you definitely want to decide what you want to do with these before you get to that all-important 45-day mark. The next ticker symbol that she had traded is Vistra Corporation, ticker symbol VST. Again, she purchased 50 call options. $50 was the strike price. The expiration date was January of 2026. This is one to keep your eye on. We're about to go replicate that trade. So if you want to follow her, you know exactly what to do. We are on the Robinhood platform, and this is their new chart system. I really like it. It's very colorful, very easy to read. Currently, Amazon is trading at around the $225, $226 mark. And I did notice it is trading at the top of its Bollinger Band. If we go and look at the RSI, it's at about 56 right now, so we're not quite in the overbought territory. One thing you may want to consider if you want to duplicate Nancy's trade is wait on a slight pullback. I don't know if that will be this week or next when all the excitement dies down, but when Amazon is having a red day, I want you to consider two places that you might want to execute this trade. Right here at the middle of the Bollinger Band, so right at about 122, that's the 20-day moving average. Or if it pulls back further, you can go down to the bottom of the band right here at around 216, or you might even be interested in taking the trade when it sits right here on top of the 50-day moving average. So right around 215, 216, those are potential good entry points. If for some reason we have a deeper correction and we lose the bottom of the band or this 50-day moving average, then the next area for you to focus on would be right down here, this yellow line, and that is going to be your 100-day moving average. That price is sitting right there at about $200 right now. If you want to duplicate this trade, you go to Amazon and you go to Amazon Trade Options. When you get up to the expiration date right here, you want to change this to January of 2026. It's 361 days from now. That defines it as a leaps option. We are looking at the $150 strike. Right now, it will cost $86.75 a share. So this would be $8,675. I know that's expensive. However, if you were to just go buy 100 shares of Amazon, then you would be looking at about $22,600. So obviously you can buy several more of these leaps options and enjoy the upward momentum than you can by actually owning the shares themselves. If you go with the levels that I showed you earlier, then this $86, it will be a lot cheaper to execute the trade. Then I might wait for the first red day and execute the first trade. And then if there's levels of support underneath it, I may sit and wait and see if it fills. If not, I'll flush out my position at the current rate or slightly higher. But if you don't buy all of your contracts at once, you will have the luxury of buying some less expensive and you can average down if the stock is to pull back. The next trade was Google. Looking at the Bollinger Bands on Google, it's trading at the very top of its band, and we are much higher on the RSI. We're at 65 right now, right? 64.57. So we're almost in the overbought category for Google. So me personally, I am going to wait for this to correct a little and pull back. I'll look for an entry right here at about 192, and I'll go in heavier if I see we lose 192 because we're more than likely heading down to the bottom of this band, or right here at about 184, 185, which serves as that 50-day moving average. To duplicate her trade, you go to the platform, you put in Google, and then you do trade Google options. Again, she likes this January date, so we're going to go all the way to January 2026 to look at what they're offering. We are going to go with a $150 strike, similar as before. Now, this one's trading at $57.70, so you would be paying $5,770. And Google, if you were to buy 100 shares outright, at this point, you'd be paying about $19,600. Again, if you wait for the optimum time to buy these, then this 57 will be a lot less expensive. Well, how much less expensive will it be? Well, here's one way to tell. You can expand this strike price right here, and it will show you some detail that is of interest. If you want to see how much this $57.70 will change up or down based on $1 price movement of Google, you can get that information right here. It's the delta. So this is telling you that for every dollar after you make the purchase, every dollar that Google goes up or down, then this option that you paid $57.70 for, it will either gain in value by 86 cents a share, or $86. What you paid $5,770 for will be worth an additional $86. If Google retreats and pulls back, then what you paid, $5,770, will be $86 less expensive. So that's the way to tell at any given time how much your option will move with the movement of the stock. And the delta is forever changing, so you can look at it at any moment in time and make that calculation. Now we're at that ticker symbol TEM for Tempest AI, and it is trading much lower than our other stocks are trading in relation to their past cycle of price movement. And if you look right here, you'll see we are trading in the bottom quadrant of the Bollinger Band. Our RSI is currently sitting at 42, so we're almost in an oversold dynamic. So this would be a more optimum time to start to establish your position in this particular stock. Now, this stock did not come on the scene until June of 2024, so we don't have a 200-day average that we are looking at, but you can see the wild upward and downward movement that we've seen since it came on the scene. So obviously there's something there. Nancy sees something in it, and this would be an opportunity for you to get in at a decent level. Here's how you would execute the trade. You go to Trade Options. You're starting to get used to this now. This is the third time we've chosen the January one, right here, January 16th. Now for this one, it's trading at about 35. We would be going to the $20 strike price to replicate her trade. To buy this call option, you would select this one right here, and you would be paying $18.10 a share. So if I were going to do that, I would select it. I would press Continue. And then however many contracts you're going to purchase, let's say I want to purchase 3 of them right here. It's going to calculate it for me. They're $18.10 a share. It's going to cost me $5,430. Now, Robinhood has this great feature, and it's the expected profit. So you can adjust this up and down, and it will show you how much you're either going to make or lose on the trade as the stock moves up or down. When you're buying a call option, there is a defined max loss, and that's right here at $5,430. It's what you paid for it. This break even right here, 38, that is telling you that when we get to the expiration of the option, that it has to be trading at $38 for you to have a break even trade. So it's kind of confusing to others when they see this. They don't know if it means once it gets over 38, but what you're looking at is closer to expiration. You want to see this stock trading at 38 or higher so that you can overcome the price you paid for it and still have some type of potential appreciation if it moves above 38 closer to expiration. And finally, we're going to go look at VST. And from a technical standpoint, it is trading in the upper part of its band. And on the RSI, we're at 63. So you may want to wait till this one retreats back at least to the middle of its Bollinger Band before you execute it. That's going to give you a better entry. And of course, if we lose the middle, then you want to look at this 50-day moving average. It's trading at about 150 there. And then the bottom of this band is at about 130. It also coincides with the 100-day moving average. Another thing I like about Robinhood, when you put in the ticker symbol, you can come down here and this will give you an understanding of what the stock is all about. And then you can come down a little bit further and start to see some key statistics that may be important to you. It even shows you the sell and buy volume. And when you have lower cap stocks like this, you are going to have more volatility. So you're going to see more wild swings up and down as you have individuals that maybe were granted the shares and they start selling them when they're rising a little. You have retail traders that have bought them and they may sell them either in profit or at a loss. So their buys and sells affect a stock that has a smaller market cap. If you look at the key statistics for this stock, the market cap is $58 billion right now. Well, let's compare that to something like Amazon is a $2.3, almost a $2.4 trillion company. Now, this call option, it also expires January 16th. It's a buy call. That $50 strike price, that is now trading at $124.70. So it's kind of expensive. If you're going to buy this call option, plan to shell out $12,470. Now remember, if you are part of my Discord, I am going to show you some additional tricks you can do with these trades so that everything that you're spending to open up the trade, that you can potentially pay for 100% of the cost of these leap calls with additional trades that I'm going to introduce. If you have friends or family members that want to learn how to trade, forward this video to them because this will be the easiest way for them to learn. They can copy trade one of the best traders I've ever seen in Nancy Pelosi. And I'm showing them exactly how with what I've shown you today. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you liked seeing how these leaps work, I did another video specific to leaps. I think you'll love it. People have told me it's really helped make it easy for them to understand and then go trade it themselves. You can watch that video right here.